This article is coming from the Motley Fool. A NASDAQ bull market is coming. One index fund with a perfect track record to buy now and hold forever. Recession fears brought on by high inflation and rising interest rates pulled the NASDAQ into a bear market in late 2021, and the index has not yet recovered. In fact, the NASDAQ is still down 26%. However, here's one index fund with a perfect track record to buy now and hold forever. It's the ETF ONEQ, Fidelity Commonwealth Trust. ONEQ measures the performance of the NASDAQ Composite, an index commonly seen as a benchmark for the high growth of technology stock. The reason for that is simple. This ETF comprises of over 1,000 large cap stocks that span over 11 markets. Top 10 holdings include Apple, Microsoft, the FANG stocks. Then you got Tesla, Nvidia, Broadcom, PepsiCo, Costco's. The 10 stocks detailed above account for more than 45% of the weighted exposure, and three sectors, IT, consumer discretionary, and communication services, account for 70% of its weighted exposure. Now, the ETF has historically crushed the markets over the last 15 years. S&P 500 has produced a return of 300%, but this particular ETF, ONEQ, has produced 500%, or 12%, 13% annually. At that pace, $150 invested weekly would grow into $141,000 in 1 decade, $609,000 in 2 decades, wow, $2.1 million in 3 decades. As a final thought, this ETF bears a below average expense ratio of 0.2%. So meaning you pay $21 per year on every $10,000 you have in the portfolio. So let's just go to the charts. And from my record collection, this is the monthly chart, ONEQ, which looks very similar to analysis I did, I believe, on the QQQ. Can't see anything there, right? Because it's all butchered up. Let's go to the ONEQ again, and we're going to go to the weekly chart, and let's go to QQQ. Alright, it's getting a little better, right? Alright, so this was the pivot that I said if price closes above, the bottom is in. Let's go to the daily chart of ONEQ. Alright, that's how the daily chart looks. I think this was the pivot high that we want to look at on the QQQ. Let's see. Yep, that's the pivot high. And that all makes sense, right? It mimics the NASDAQ composite index, but the ONEQ has in its ETF 1,000. QQQ has the top 100. For my money, I'd rather just buy the QQQ. It's a matter of seeking alpha. The more stocks in a portfolio, I believe the less alpha or returns you're going to see. So if I had to choose between the QQQ and the ONEQ, my money is going to be put in the QQQ as I'm seeking alpha, higher return. And as we've seen this year, the FANG stocks have allowed the S&P to be positive this year. So thanks for watching. Subscribe. Please like the video.